Hey everybody, good to be back here with you. Mike Fairborn. I should say good back. It's good to be back with you, but in this class taught by Cameron May, cover calls and short puts. Happy to fill in for Cam today, who's not feeling well. Uh, Expect to see Cam though, maybe next week or so for this class. Anticipate that. But good to be with you all today, folks. Looking at the markets today, bouncing, and I think kind of in a surprising fashion. We're seeing a lot of strength here in technology, although some other areas, we'll just briefly look at that. Some of the other areas, some of the other sectors in the market are showing some strength as well, but namely communications, technology, and the top one is financials. So looking forward to going through that with you, looking specifically at some short puts today, but not just short puts. We want to see some of those that are showing some strength at the top also because in many cases, investors, traders will try to sell puts on potential bottom type stocks as well. But we've got a mix of those companies that might be showing those indications right now. So I'll look forward to diving on into things with you. Hello to you, see ya, as well as the usual suspects from the Lone Star State. Exactly. We've got Ray. We've got URG. You are great, I should say. Good to have you here, as well as Lawrence J. Richardson, Life in the Fast Lane. We've got some great titles in here, but good to see you back, as well as Jackson, Tony, Mark, and Sharon. All right. Yeah, I do. Yeah, I do look a little different today. And by the way, I'm a little bit shorter too today as well. So we'll put that as a note in the little side column there. But good to be with you all, folks. Hello to you, Sharon and Dom. Let's get going here, folks, with some disclosures. I got a few things to take a look at today. So starting off, first, options carry high level risk. They're not suitable for all investors. Information here is for general information purposes only. Vesting does involve risk, including loss of principal. Now, short options, key point, can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM options have a higher risk of being assigned early. Paper money software application for education purposes only as well. Oh, there was one in there. Risk of REITs are similar to those associated with direct ownership of real estate. Rolling strategies can entail additional transaction costs. Now, key point too, because we're going to be looking at a couple of these, there are risks associated with investing in dividend-paying stocks, but not limited to the risk that stocks may reduce or stop paying dividends, because that's always a possibility. Now, there are some stocks that might not be in that position, but they've been paying dividends for a long time, is what I'm saying. They might not, they have a history of increasing those dividends, but not in all cases, right? And they can always be cut. So, little final note there on dividends as we look at this. Just real briefly here, I've talked about this because I do teach that market and sectors class. We kind of keep tabs on sector strength. We look at divergence, especially within market breadth. And we did see, and just something to keep on your radar, this is a big lineup here. It's a big round number around 6,000. We have had a tendency to sort of gravitate around that level, obviously, with all-time highs. It's a key note, but if you take a look at the equal weight, because the SPX is a weighted index, if we go equal weight, we did not get a new high here. And so there could be, we just might not have the breadth that we need sometimes to keep the trend going. In other words, it doesn't mean we're just going to come back down sharply, but we could tail off a little bit. You'll notice over here, same thing at the SPXEW. This part of the year, we did make a clear new low down here. This is a lower low, but you can see if we do a quick comparison, let's just throw the comparison chart in here, and then we'll wrap it up with that. But here's a comparison of the SPX. Notice the SPX, the weighted index portion of it, was a little bit higher here. We actually did make a new high in the share price, but then it dipped. We just didn't have market breadth behind us, right, on an equal weight basis. We also saw a new high over here like we're getting right now, but we're not getting that again. So it always makes me kind of curious if we can power through and get all those other companies on board with the S&P, or could it tail off a little bit? Because prices can tail off if you get enough of those companies kind of peeling back a little bit. So let's pull this guy off and continue. And one of the areas that has been showing strength, as I mentioned to you all, let's go back over into our quotes. This is just a good, quick way to do it. Just the change on the day is so helpful. And things are changing so fast these days. Can you believe this news cycle? It's absolutely unbelievable. It never seems to stop. And that means volatility for us, right, folks? Because we are in the midst of it in the market here. Those are your top three. What's held up the best today, though, is you might be looking for opportunities to sell a put or to place a covered call. These three have remained intact. I would say technology has remained the strongest, though, about 1.6% on down the line. But that's your weakness right there. The staples, healthcare, energy, and utilities. We'll see if this does follow through. We might not have the breadth in the market, but it is interesting to see. A quick note, the NDX, as we're getting into the tech-heavy indices, that's an all-time high range. And what have we done here? We have kind of held flat. The last couple times we were there, folks, we did pull back. So it does make me wonder, is tech going to be strong enough to bounce higher? It's an interesting question to ask. Sometimes, too, do you guys remember this? What is this candle pattern right here? This candle pattern. And I've got something else to ask you. It looks like actually a face, doesn't it? As you look at it, but as I circle it with a round shaped head there. But does anybody know what that candle pattern is? There's something unusual about it too. You actually get one very similar over here. But this one came after a sort of a pullback. And then you saw the bounce. Oh, by the way, I'd love to welcome Barb into our class. Great to have Barb here. Just as a quick note, as you guys are answering this question, but great to have Barb on board. Really appreciate it's a privilege to have her here. She's a great friend of mine and appreciate her being here. Folks, you can follow Barb on X, Barb Armstrong CS. Make sure that's spelled exactly that way if you want to get Barb. She does have a few stragglers that like to follow along. Imposters, I should say, is what they are. My handle there, Mike Fairborn CS. Okay, you guys got it. Morningstar, says Kevin. That's it. There's the hit. There's the base hit. That's a Morningstar. And you can see you get the pullback here, you get this bounce, and then you get the recovery. What's interesting is it's happening at longer term resistance. Will it be enough to break? Could this open the door towards a number of short puts or swing trades that could be taking place? Because we have had a fair number of price patterns set up here. We've seen some bull flags set up, possible bull flags. It is interesting though, because we're not, these generally are at a pullback. And then you see kind of the bounce. We haven't had much of a pullback and we're still right at resistance. And so this is what I always say to everybody. And I say this because I wasn't always this way. I would see something like this. I'd see the market up. I'd see some strength in here. Obviously, technology is leading the way. We're looking at really a technology-heavy index. I'd say, hey, there might be an opportunity. One problem, though, let's just go ahead and put a big R over here. And it's not for restricted, but it is for resistance. And does it pay to wait to see if the index as a whole, collectively, can get a little bit higher? I'm just saying a little bit. There's your line right there. That's resistance. I mean, there's not a lot of price movement between here and here, really. Could you wait for that and maybe get a confirmation? Maybe you find support, prices get above it. Maybe you just get a stronger breakout. But I don't know. I used to just buy, I'll just be honest, I used to buy at resistance. I'd get excited. I'd say, I got to jump in. But that is all-time highs. In fact, let's just go to a monthly chart just to kind of show you where we're at. Sometimes you drag for a couple, 2-3 months. That was a 3-month drag, and then we dipped. We don't know if that'll happen again, but that was a 3-month drag, and we dipped. We're right back up to that same level, and we're showing maybe some concern about market breadth. That's all. All right. Well, with that, folks, we're going to be talking about selling options today. Selling options are very interesting. And, because, hey, that's an interesting way to try to generate premium, right? And prices can go 3 directions and you can still make your max gain, which makes selling puts, I want to talk about selling puts today, quite intriguing, doesn't it? Imagine the price of the stock going 3 directions, any 3 directions, to certain degrees, over a set time frame, and you still make your max gain. That always intrigued me, especially since when selling puts, it's in that bullish to neutral position. A lot of us are kind of geared and focused in on the bullish side. With that, that means higher premiums could be interesting. Let's throw out a couple high premiums here. Well, one thing we could look at initially first, the VIX. The VIX, we'll move this guy over here because we're looking into the future here. But the VIX did shoot up above 20 on Friday. We're back above 19 right now. I know a few of you were looking at the VIX and you saw this move up. Sometimes it can just sort of inch higher And once prices come down, perhaps they can continue to come down, and that means the VIX could go up. Now, all else equal, this would be a positive. I mean, all else equal. A higher VIX could mean more premium in that sense, meaning that we could sell our puts at lower levels, maybe reduce an expectation of prices going to those levels, but still get paid like a relatively high premium. So watch that. I mean, we are coming out of a base, and sometimes you might get, here's a start. This is what the start of these moves look like. They just start moving off the bottom, moving off the bottom, moving off the bottom. Will we get moving off the bottom again and a little bit of follow through? There could be some opportunities for those short puts on the short-term horizon, but we'll see about that. Let's start off first by looking at a company that is showing some strength, PLTR, taking out a level just above, prior highs. And you can see there has been a pretty good history of this taking place. If I take a look at PLTR, they did beat expectations, and we don't necessarily have earnings over the next, well, let's do this, because we might want to avoid earnings over, let's say, the next month, 20 days, 20, maybe close to 30 days or so. We might not have an earnings announcement. 1, 2, 3, maybe sometime in August, early August, we might get an earnings report for PLTR. So we're kind of out of the woods in that sense, but prices shot up. Now you saw the VIX around 19. Where's PLTR at in terms of its implied volatility? Whoa, okay. Now we've got 32 days, but does that take us into earnings? It might. So we might be looking at a shorter term time frame if we were selling a put here. That is a jump up. One quick way to take a look at this, I'm going to take a look at earnings anyways, but if I just go over here and we'll narrow this way down, how about 15 strikes? Well, implied volatility really jumps up even higher in the next month. So leads me to believe that we might not have an earnings announcement. I'm going to push this guy over to the right, and let's just see if we have an announcement that might have been set in place. Let's go 35 bars to the right. I'm going to the time axis here. So I can see that earnings right there. It says a question mark, so it doesn't know for sure, but that's about 8.4. So we're estimating, let's see if we got 32 days. Just click on this, and I'm just looking at days as in calendar days, and we're clearly there. Clearly fine. I mean, there's 32 right there. There's 32 days, and that's what we're looking at when we're over here on the trade tab, right? Because each and every one of these days is important with options, right? There's theta involved. And when we're selling puts, that is helpful to us. So one of the first things we could look at is maybe a level on the chart. I want to review delta here in just a second with you. But where might we find support at on the chart that we can actually maybe build around delta? In other words, what are our expectations that prices wouldn't go down there? Maybe 20 to 40 range. More on delta in just a sec, but look at this over here. If I drew a line right across there, previous highs, in fact, there are quite a few. That's going to show up pretty clearly too if we were to look at, let's say, any of these, 30-day, 30-minute chart. There you go. So you get a general sense, 130-ish. There's a touch to 130, all through there. There was support here. Kind of came down and touched really close to that level again. 130 might be an interesting level. It's kind of in between the 140 and 120 for selling a put, or maybe even below that level. Let's just see now what we're getting here on our deltas. And again, the delta ultimately means that for every $1 increase in the underlying stock, the option will go up or down approximately by the amount of that delta. In this case, it's on the put side. We're selling puts on the bid, but we could see for every dollar increase, a 25-cent reduction in that range, right? So that works in our favor. If prices go up, reduces the put prices, and that's potential unrealized premium. Now, one of the things I wanted to state here as we look at this, how is the volume doing? Well, you've got pretty good volume over here. It's a pretty beautiful spread, you must say, 5 to 10 cents. How many shares do we have on the underlying stock? 61 million thus far. It's pretty liquid. The volume today is in the thousands. Now, traders will use a range between 20 and 40. I should say 0.2 and 0.4. Ooh, I got a little bit of a late response on that drawing tool. 20 to 40 delta. In other words, they just want to say an expectation quite low. We're just going to give ourselves a range. You know, this is 25. It's beautiful. It fits right in that range. That's their expectation, a 25% chance, they might say, or 25% expectation that prices would actually go down below here by expiration. That's what the deltas could tell an option investor, or trader. That's what they're looking at in a lot of cases, is that expectation. So not only could there be support there at that 130 range, but also you can see that there might be a low probability in terms of not probability, but just using historical implied probabilities. Historical implied volatilities is we're getting some of this option Greek information or data. Okay, so just wanted to do that check here as we look at it. There's your 385 to 395. You can see it right there as we're looking at it. How are other things going along, by the way? This is always great to see. The RSI is higher than the prior high, and you'd want that because we are up higher. But this gives us a little bit of room, doesn't it? It gives us some room. If I pull my y-axis down, let's just visually go through this. There's our support level. Here is potential price action at this point. The trend has been up. It's been making higher highs and higher lows. We like that because if we can stay away from that 130, the traders will look to try to gather the full credit or the full premium, or at least, a portion of that premium by expiration. So they might try to just capture what they can, which is around the 385, 395 range as I looked at it just now. So that is $395 a contract for prices to stay above this level, above the 130. So what could we see over here? Their expectation is it can go up really as much as it wants, maybe sideways through here, or even dip to the tune of, because there's just a higher expectation clearly from the trader's perspective. If you're getting close to that 130 by the expiration date, there's just more of a likelihood of assignment. So we're looking at about a 13-point move to the downside, where you might be able to kind of go into a sideways range or even down a little bit. That's 1, 2, 3 directions the price could go to still try to collect that premium. But again, this is sort of a strategy that traders might be considering and saying, well, you know what? I'm not going to buy, I don't want to necessarily buy the stock, so I'm not looking at that one delta, $1, or let's just say $100 for every share for every point that it goes to the upside on a 100-share move, for example, right? Dollar for dollar move. We're looking maybe from the perspective of somebody selling the put to collect that premium. And so sometimes traders might go even a little bit lower just because they want to maybe improve their expectations. Like down here, you're still getting, 125 versus the 130. It's not to say that you can't try to trade out of it, out of the trade, if, for example, it goes against you. But, of course, the option market would have to be open to do that, right? But I'm just saying, sometimes they just might want lower expectations of the stock actually working against them. So I'm going to do this. I'm going to put it out here. I'm going to leave it up to you guys. I'm just going to throw a poll out here, and I'm just going to put this in, and we'll just go with it. Which put to sell? This is so much better with the poll. I used to just send these out. I just ask the question and start looking and trying to estimate, but it's oftentimes way too close. Which put contract to sell? We're going to say the 130 or the 125 in our paper trade example here. Boom, there it goes. Okay, we'll send that on through. Remember, and a quick note too, by the way, it is survey time, Barb said. Thank you, Barb. If you get a chance to fill that survey out, that'd be fantastic. Anything you liked or found effective, anything you want to say at all, believe me, that's the place to say it. 10 if you loved it, 1 if you hated it, things along these lines. Let us know. All right. So with that, let's do this. Let's take a look and see what the theta decay is 7 days a week, including holidays. We have a holiday this week, don't we? We have Juneteenth, which is going to be on a Thursday, but there's 12 cents, 10 cents a day. Not too bad. Of course, it's a higher price stock, but there you go. There's some fairly decent decay that you would get during a week's time frame, right? Well, okay, what, 7 days? So just quickly imagine that. I like to do these things too, just kind of give me a general sense of, hey, how am I doing at the end of the week? Now, there are other tools we could look at to help us with this, but let's just say, for example, it is the 130 we're using. We've got 12 cents. We're just making the estimate here times 7. It's getting close to $1. $1 in 1 week. So, yeah, some pretty decent decaying there. Okay, the 125. You guys are going for the 125. There it is. I'm going to put it in right now. I'll go ahead and just stop this poll. There we go. Thank you for voting. And confirm and send. Let's just take a look at it right now. Let's talk about this a little bit too. Because we have a lower break-even price too. Because why? Well, because potentially we're generating that income that, I should say, well, it's potential income, but if we get to keep the premium anyways, and what does that do? Doesn't that lower our kind of our purchase price to a degree? There's one way to look at it, right? If we're selling at the 125 level minus at 125, where's our break even? Our break even has actually been reduced by the amount of the potential premium. I haven't put it through yet, but based on what we're seeing here, that knocks our break even down. That's an interesting factor, an interesting consideration. So it's not even 125, it's 122.22. Max profit is 278. Always be mindful of commissions, how they factor in. Now the max loss is a little bit bigger because it's factoring in what is the possibility. We know that if there is an assignment, we're buying 100 shares of stock of a standard equity options contract, right? We sell one contract, 100 shares of stock. If the stock were to go to zero, that is what you're looking at right there. Now, that might not have a huge expectation from a lot of people, so they might put it in context, right? They might have a relative perspective of that stock max loss. And by the way, that also assumes that it goes to zero and you never try to get out before it goes to zero either. Let's send it through. Okay, we got some of the basics down, but I like to always do a little short recap on this. And it should sell here momentarily, but that's our first one. So you just draw a line. I'm going to draw this down a little bit lower. There's our 125 right there. So now we're giving it a little bit more room, aren't we? In fact, there's another, wow, that's another key support level right there. And it's not unusual to look at a few of these strike prices based on support levels, possibly longer-term moving averages. Say, for example, 100-day moving average might have been bouncing off this price really well. It might be sitting right around 125. Whatever the case might be, could be interesting. Ooh, good strong move on, even though the RSI is not making new highs, collectively, that money flow is, and that's sort of interesting too. There's the fill right there. Okay, 179. Filled at 278. There you go. Okay, let's continue on. All right, let's go. These are going to be a little bit more rapid fire because we got a little bit of our discussion out of the way there. All right, so next one, a little bit different area. Here is Ball Corp. Now I'm going to clear that line off, and you can see that Ball Corp is breaking above highs right now. We'll see how it finishes off. What I found interesting with Ball Corp, just looking at the chart, folks, that is a gap. That's a gap down. We gap down pretty good and dip pretty far down. And some would say, we're seeing a lot of these out there, shoulder, head and shoulder. So many head and shoulders out there. So many, really. I mean, that look very similar. Being that could be the case, if I draw a line off the top there, that's the neckline. So there might be even higher or greater significance of a break here, and we might have a price pattern retracement. I'm just going to eyeball this. This is so cool. I love it when you have it over on the right-hand side. You know, you've got this like 10-point range. It's so easy to make that adjustment because based on a head and shoulders pattern, what would the range be up top? Well, if it's 10 through here, then I would say 10 through here is how that retracement could take place. And that puts us right near 65. Look, I didn't make an exact comparison, but that's another number that it could be gravitating towards. what appears to be just below 52-week new high, possible resistance there. Okay, so it's breaking out. Are we going to see on this the kind of implied volatility previously? No. So this is a comparison. I want to talk about this because as you're looking at different puts out there, there might be, something that you're considering. You're saying, well, okay, we've got the puts. What is my expectation of the price of the stock going higher over this time frame? If I don't have a huge if I think that it's going to go higher, at least stay above that short put level, well, what am I comparing here? I could be looking at trying to get higher premium. I could just have a higher expectation of what I think could happen on the stock itself too. Do I think it's just going to break out? Maybe I'm not getting as much premium, and that could be easily a comparison you'd want to make amongst a group of maybe options that you have choices to maybe sell puts on if you wanted to do that. But the other side is are you okay just putting a trade on because you think it just might go higher? You just think there's just a greater chance. I like the breakout potential, whatever the case might be. That's another comparison. Right? It doesn't always have to be the highest premium out there. Of course, we're looking at an interesting price pattern. They could have a bigger move. Could somebody start off by selling a put? I say this because, this is an approach that I think a lot of investors, traders can use. Just generally speaking, doesn't it make sense? If you're starting out of a move out of breakout, you might start off with selling puts. And then if it shows more strength and more conviction, you could buy stock too later. You could generate potential income with the put, but then buy the stock more after you get more, buy the stock later after you get further confirmation of the move. Okay, where are those deltas at? Ooh, there you go. That's the whole range right there between those two. What a range too. 55 and 52.50. So 45 cent, about a 15-cent credit on both, right? So the spread's not too bad. You do not have a ton of open interest here on that ball. So we're not getting a lot of options, but I would say this. It does trade generally, a million shares. It's already there today. So that can also be something that traders would look at. I'm going to throw this out here because I want to show you how you can kind of merge this in if somebody did want to, let's say it gets assigned to them and they're okay buying the stock. Does this stock have it does pay a dividend too, not too high. We'll look at one here in a second, more on the bottom side. This is more of a breakout, but somebody might actually say, I'm okay buying it at 55 on terms of the breakout because they think there might be support there. Just a thought. All right, it is a breakout. Again, some people might look at this and say, I'm going to sell no put. I'm going to be buying stock, whatever it is, this paper trade. You might have a different way to see it. Here's the trade. I'm just going to put one in at 55 here, just one. There's only volume of 5 today. The spread's not too bad. Okay, it might be tied into that volume. By the way, a lot of traders won't take any trades over here unless you've got 100 open interest in the hundreds. So it's a little bit different. Let's just say somebody's anticipating owning this. Possibly maybe they're okay, one or the other. I'm going to bump this up just to 115. Oh, there you go, penny wide. 115, get a little bit more out of it if I can. Confirm and send, and let's just see what we get. But before I send it, pulls down our break even. So are we really buying at 55 if we end up owning? Well, if you look at that premium as a way to lower your potential cost on the trade, no. It's about 53.85. Well, I should say right at 53.85. There's the max profit, but possibly a way to buy stock and get paid to do so at possibly a lower price too, because right now we are above 55. So it's kind of an interesting in-between trade. I thought I'd throw it out there. I think a lot of traders out there would just say, you know what, it's a breakout. Maybe I'll just buy shares instead. I don't know. I could see that being the case. Some that are early to the game, maybe they'll do something a little bit different. Okay, so you got that. Now I'm going to move over to one here. Now this one is, gosh, it's been in a sideways pattern for a while. And I've been looking, I did some investigating into this just for our discussion here today. I've been tracking a little bit of Pepsi as I look at it, but that's a big screen. Look at this. Look at this guy. There's your weekly. It's kind of holding at this longer term support. And there's your monthly. I want to talk about why some people might try to use a short put to buy stock as well. We just talked about that premium. Okay, it's been holding that 130 pretty good. Pepsi's interesting because I believe it is a dividend. I think it's an aristocrat, if I'm not mistaken. It's aristocrat. So they've been raising dividends for at least 25 years consistently without missing it one time. Let me just double check that though. It is there. It is there. So it's part of the S&P 500. It's been raising dividends for at least 25 years each and every year. That's normally a pretty good sign. So I'm just curious, probably at these levels, if it's been raising it and it's been down premium right there, you're going to be hard pressed to find 4.34 on Pepsi, probably going back a long way. And one of the reasons is they're raising that dividend at the same time the price of the stock is going down. Folks, that's pushing up the yield as long as they can continue to raise the dividend or even keep the dividend the same. But you can see right here, voila, they did increase it right there. 1.355 to 1.42. Okay, so not too bad. Just for the heck of it too, I'm just going to double check over here and just see how long they've been raising this, because we do have the Dividend Kings, which is, yeah, another 25 years at least. I don't know if it's on here though, but alphabetical order. I just don't check this list too much. It is. It's a Dividend King. So they've been raising their dividends for it's 50 plus years. I guess it could have been the 50th year this year. Now, having said that, and I'm getting us into the weeds a little bit with maybe somebody buying. We looked at two that have been kind of breaking out. Here's one on the bottom. Some people do like to look at this, and they could be interesting at times. I mean, there's a dividend, but this could be a way to maybe buy the stock and get paid to do so too. Like, let's say it's been down here. If it dips below or you get assigned, it's 130. Maybe you can end up buying the stock cheaper. There's no guarantee, of course, that you're going to be assigned, especially if you're above that price by expiration. But if you could kind of build some income if it continues to go sideways here and then ultimately buy shares. I mean, there are a number of different ways to look at it. I want to show you this because I think anytime a stock goes down like this for a while, you want to take a look into it a little bit further. I've got an account summary pulled up right now that I want to pull up. Wow, that's bright. All right. Just on schwab.com, I've signed in and I've just pulled up Pepsi right here. Let's go ahead and select it. A couple things to look at. When it's down that much, one thing, folks, you want to just kind of take a quick peek at, because think about it this way. You might be interested in buying the shares by selling a put and getting paid that premium to do so, and maybe trying to buy it a little bit cheaper than where it's at right now too, right? Closer to the 130. I want to go down here. You want to click on Show More. And what some traders will look for is this. Oh, okay. So estimates for this year, they are off a little bit in terms of, can't see that at all. Let's go to black. They are off a little bit this year, 3.3 in terms of their earnings. But that's dropped the stock down a lot. See the 3.3? So it's expected to dip a little bit. That's not too much of a dip relative to, do you see the share price in between those lines? That's a pretty big dip in the share price. That's the recent consolidation. That's more, folks. I would venture to guess that's more than 3.3%. And over here, revenues look to be staying the same. Digging into this too, I mean, it's safe to say that, investors have, they've been adopting a bearish stance on the stock. Is that a safe statement to make? They've been adopting a bearish stance. Now, I did know last year there was a recall in the Quaker division. Quaker, like Quaker Oats. I don't know if it was the oats, but it was Quaker. There was a recall. That wasn't great news. But let's see, how did they do over here on earnings? So they missed it by 2 cents, but that's not too bad. The last thing I want to check for, because we are looking at the stock, is I do want to see what their cash flow looks like. Because they've been raising those dividends. They pay the dividends with cash. So you want to scoot down here to statements. Go down to Show More, right off schwab.com. Cash flow is where you're going to see, let's see, cash from operations right here. CFO, they refer to it as cash from operations. And by the way, with Schwab, it does move. If I can get this all on the same screen, it's interesting. It's like reading a book in Hebrew. Have you ever seen a book in Hebrew? It starts from the back and goes to the front. It's funny. You go from right to left. Most places I look at don't do that, including Thinkorswim. They go from left to right. But keep that in mind. So the trend you're looking at is going higher, staying strong. Look at that. They've got good cash flow. I mean, it's flat or higher. I know we dipped a little bit from last year, but we're still holding up in these major high levels. Okay. Very, very high levels in terms of that. So that's kind of like a lot of traders would say, okay, it's got the cash flow. So potential to keep the dividend up. Now, if we were going to sell this guy, we'll go over here. We'll go full screen. We can take a look at it over this time frame. Some might go right at that 130. Does it have that? We might, well, here's the thing. If they're looking to buy shares, get assigned, or just pick up because they think the price of the stock's going to hold near that 130, it's a little bit higher than where they'd normally just be selling for income. But in this case, they might be trying to buy the stock cheaper. And if they can even buy the stock a little bit cheaper, boom, the dividend, as long as they keep paying it, they've been doing so for 15 years. But that right there is probably a really, really high level. Now, open interest, super high, volume, really good too. So this is a way to try to look for those income type stocks that they think there's a consistency. And the spread on that right now is 5 cents. Let's go ahead and take a look at this one right now. I realize the delta is a little bit higher, but there are different reasons why somebody might look at this one in particular. Okay. All right. So let's pull back up here. There you go. We'll put this guy in so you can see it. Break even's lower, right? Because you're getting that income coming in. So you're actually, you'd be actually like, collectively, if you're including your income in there, you'd be buying stock at 126.65, not the 130 strike, because of the credit, which is $3.35. So it's another way to maybe start a position, or if it just holds above there, you don't get assigned. What are you doing? You're still bringing in that potential income. Look over here with me, folks. There is your max loss. Of course, if Pepsi goes to zero, they got a lot of free cash flow, or a lot of cash flow from operations to go to zero, but that you got to see it because that is the risk right there, right? And that's if you don't, try to get out of the option or the stock too. But let's send that guy through right there, and there you have it, 335. So a little bit more interest, kind of interesting on the bottom. Now, let's do this. Let's go from bottoms to tops, or to the upper range. What about On Semiconductor? Of all the semiconductor companies out there, as you look at them, and there's a few. I mean, here's AMD having a really good day. It's up 10 points. At 9%. Geez, that's all. Just up 9% on the day. That's a good annual return, but you're getting it on a day. This is only up 5, but notice the consistency of On. Now, will it remain? We don't know, but you're getting this upward move, consolidation. And look at this guy right there. Bounce. You are getting the bounce. Will it hold there? We don't know, but it's getting the bounce. It's a little bit cheaper too. I have a feeling that technology stocks are just going to carry a little bit more implied volatility, just generally speaking. But this has been one of the stronger groups, semiconductors, of the NASDAQ. So keep that in mind. Let's go here to the trade tab and just see, there it is. We're about, darn it, we're not double ball, but we're getting up there. Hang on. Before I get to ball, I didn't mention Pepsi. Before I get to On, I should say. Pepsi was right, a little bit higher than ball, but yeah. Is it higher than the current VIX on the S&P? You're darn right it is, folks. That was 19. We're about almost 10 points higher still. So taking advantage of higher implied volatilities here. ON. Okay, shooting for a general range here, there are your deltas, and you can see that this is a 5 wide. Now, do we have, no, it's not. It's a 5 wide from here to here. But from here to here, it's not. It goes, that's interesting, 5 wide above 50. But if we're looking to sell, there's kind of the bottom. I'll do this. I would say you could even go to that level. It's not, we can go wherever you want. You can sell down here if you want, right? Sell an option down here at 45. But look at that 48. It's very close to, there it is, 0.2. There we go, 0.2. So that's your general range. Now, I chose to do a little bit differently this time. I shot right for those deltas for the expectation of where they, in terms of a percentage of it getting down to that level. 28 at 50, 50 is kind of that round number. I want to see that on the chart. I want to see 49. I want to see 48. Let's just see where those stand. We can see even lower too. There's 50. Where was that last support level? We did break above 50, pause for a little bit, and hit it. There's another one down. Ooh, it's a little bit further down. Next support is right there, which could be a possible Fibonacci level. I'm going to use the bodies of the candle. Yeah, it looked like it. 38.2. That's a little ways down, though. By the way, the first fib, 23.6, 49.05. Do you want to give it some room around 50? Or are you okay owning it if it comes to 50 and you get assigned by expiration? All these variables that you can consider, and that's kind of a cool thing with short puts, but it's all, remember, kind of a bullish position, bullish to neutral we're looking at. I'm going to go ahead and just do the 50. It's a 27 delta right here, a 4 theta. It's got the second highest, you can see over here, the second highest open interest you can see over here. There it is. Yeah, so let's go ahead and click on the 50 right there. 137, super good spread. Look at the volume up top here too. Pretty darn good. Now, let me take a look. I'm just gonna look at one thing here as we get going. Okay, yeah. So it lowers our break even. So it's not like we're buying at 50 if there's an assignment. If you look at that premium coming in, combining that with the purchase price, right? It could you potentially, you're looking at a possible lower level. Although you're buying it at 50, you're getting a premium. So 40, that's break even, 48.63. So you're below the 50. Max profit, max loss if it does go to zero, the stock. That's your buying power effect. And that is your credit. Okay, as we're seeing here. I'm going to send that guy through, and there you go. Ooh, that spread's very good. That's 4 cents. That's a 4-cent spread. You don't get those every time. But what does help is that volume. That can be helpful. Folks, today we did a few trades. We looked at a few. We did Palantir. We did Ball. We did on semiconductor. We did Pepsi as well. It's a totally different kind of a play, more like the acquisition of shares there. I hope you found this helpful. Thank you, Barb, so much for your help in the chat, folks. As Barb mentioned, please hit like and subscribe. Yeah, if you found some value out of this presentation, love to have you on board. I do teach a swing trade class where we do look at a number of sort of setups like this, some off the tops, some off the bottoms. That is going to be tomorrow at 1 o'clock. 1 o'clock my time, sorry, so about 3 Eastern. And I do recognize many of your names that do go, but Barb has mentioned also, yeah, so please fill out that survey if you get a chance to do so. I will look forward to future discussions with you all. I hope you have a fantastic rest of the day and a good shortened week this week, right, with the holiday. So something to look forward to. All right, everybody, take care. Thanks so much.